This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Whoa ho. Ho ho.
All right, is that what we do now that it's December? Ho ho ho.
Ho ho ho. Or will it be? I mean, I can't even believe we're at December already.
Are you saying you don't know if there's going to be a Santa Claus rally or not? Is that what you're saying?
I just can't believe that we're in December of 2025 after the year that's been. I mean, we're not quite there. We have another Fed meeting. That's next week. I just feel like all the stuff that's come out of investors, like where do we go from here?
Well, we're off our worst levels of the day on the S&P 500 right now, but still in the red, down 0.1%. The NASDAQ composite down fractionally. The Dow Jones Industrial Average down 0.4%. Charlie Pellet's going to have more in just a minute, but off the worst levels of the day, Carol.
Yeah, pretty wild, right? All right, so we've got just some slight losses, but as you said, off our worst levels. U.S. Treasury is falling thanks in part to a slide overnight in Japanese debt. This has been a big global bond story on this Monday. The reason we saw that slide, expectations there in Japan of a rate increase later on this month. And then, as I said, we've got a Fed meeting and decision next week. It's practically all but certain as 100% or 99.99999% that we're going to get a rate cut next week.
Okay, stuff can happen between now and then.
Like what?
I don't know.
Like what?
We don't know what could happen.
Like a crisis?
Maybe.
All
I don't
right.
know.
No, we're not saying that. Hey, so anyway, this hour, well, this is kind of what we're doing the next 60 minutes. Is the glass half empty or half full when it comes to things like stocks and the market right now? And what are the catalysts out there for the upside or downside moves? So we're going to get into that.
Also, an update on how consumers are faring in this economy from Black Friday to Cyber Monday in the next few weeks. Dana Telsey is going to be with us of Telsey Advisory Group. She tracks it all and those big retail names too.
Glass half empty, glass half full.
I think it's going to be half full. That's what my prediction is.
Also, Jay Chaudhry, he's the founder, chairman, and CEO of Zscaler, on stock outperformance and on earnings disappointment, because the stock did take a hit on that. But nonetheless, some growth concerns, but we're going to hear what the CEO has to say.
All that and more coming up over the next 60 minutes right here on Bloomberg Businessweek Daily. First up, though, he is back. A check on the trade and top business stories. Here he is, Charlie Pellet.
Half empty, half full. Let us begin with the NASDAQ 100 index, because moments ago it turned positive, barely. Right now back in the red, down under 0.1%. Little change, but the key theme here, we are seeing some sort of recovery in the market today after earlier losses. S&P right now down 12. 68.36 where we stand, again off session lows, down 0.2%. Dow Industrials down 211, drop there of 0.4%. NASDAQ Composite Index down 29. For NASDAQ, a decline of 0.1%. And to be clear, NASDAQ 100 index now down 0.1%. 10-year 4.09% with a 2-year that's currently yielding 3.53%. Gold flat on the day, 42.38 the ounce. Silver, though, surging 3.3%, 58.38 the ounce. West Texas Intermediate crude up 1.3%, 59.33 a barrel. And Bitcoin, major story today as the selling continues and intensifies. Bitcoin down 6.6%, 85,111 right now on Bitcoin. Moderna shares down 5.9% after the FDA said in a memo late last week it will place new restrictions on which vaccines hit the market. Other vaccine makers lower as well. Case in point, Novavax down 3.8%, and BioNTech, it is down now by just about 4.6%. Again, recapping here, the Dow, the S&P, NASDAQ, all in the red. We're off session lows with the S&P down 0.2%, and Bitcoin keeping a close eye on that move, down 6.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Great stuff as always. Charlie Pellet, thank you so much. We'll be back to Charlie a little bit later on. All right, as Charlie mentioned, stocks down off their lows, though, of the session. You've got U.S. Treasury yield. They are backing higher. And so the start of a historically strong month on Wall Street did see stocks falling as traders shunned riskier corners of the market amid a sell-off in cryptocurrencies. Nearly $1 billion of leveraged crypto positions were liquidated during a sharp drop in prices today. So that fall off and kind of backing away from crypto, Bitcoin continues to.
There's also that rout in Japanese debt rippling through global bonds. Great to have back with us Bloomberg opinion columnist Nir Kaissar. He's founder of the asset management firm Unison Advisors. He joins us from Providence this afternoon. Nir, I don't usually start with cryptocurrency, but it does seem like this is worth talking about in terms of, okay, not just that Bitcoin's down another 8% or 6% right now as we speak, but any sort of signal that sends about the wider risk appetite in markets right now. Is there one?
Hi, Tim. I don't read crypto in this moment as sending broader messages. It is highly correlated with risk assets generally, and we tend to look at it alongside stocks naturally because of that relationship. But, when I look at what's happening in the crypto world and then I look at the stock market, I'm struck by the difference in the sentiment. I mean, stocks, the fundamentals look good. The market is relatively healthy. We've had some bumpiness recently, but for reasons we can get into, I don't think that's cause for concern. Crypto, on the other hand, looks like there's some real demand issues there. And, I have my own theories. I mean, the problem with cryptocurrencies, as everybody knows, is there's no fundamentals to look at. So it's really a supply and demand story. And once ETFs came to market and a lot of people started piling into crypto, there was tons of demand. I think this may be just a natural breather. The people who wanted to own crypto did, and now are taking some profits, and that might be creating a new supply and demand balance than we're used to the last couple of years.
I mean, what do you make of, I just want to stay with crypto, Nir, for a moment, if I can, Strategy creating a $1.4 billion reserve to fund future dividend and interest payments, which will cover at least 21 months of dividend payments. The share price, though, under a lot of pressure in today's session. And so, I don't know. And then they're saying they'll sell Bitcoin as a last resort if needed to fund dividend payments below. I think, Tim, you mentioned... without crypto, what are they?
Yeah, without Bitcoin, what is Strategy?
Without Bitcoin,
this is, that's what they are. I mean, there's a software business, but that software business doesn't actually put out enough cash to pay the dividends. So how does it do it?
Yeah.
Well, I think, Carol, the problem there is that, if you wanted to just own Bitcoin, you would own Bitcoin. So these companies that are effectively, Bitcoin strategies, Strategy, they have to have another reason for being. And I think one of the cases that they can make is because we are a corporate entity, we can sort of shield investors from some of the trauma that's involved with owning cryptocurrencies, including Bitcoin. We can have regular liquidity and distributions, et cetera. And I think now they're thinking about what happens on the longer march. To the extent that there's going to be big ups and downs from Bitcoin, and there will be, without a doubt, there will be. It's in the volatility numbers. Can they add value on top of it? And I think they're in the process of trying to answer that question. That's going to be very difficult to do, I think, to manage that volatility in a way that allows them to pay regular dividends and behave like a stock rather than a one sort of cryptocurrency, say, pot. But we'll see. I think that's what they're trying to accomplish.
Neil, well, go ahead.
No, please.
Nir, I was just going to say, before we move on to broader indices and broader markets, I'm just wondering, remind us, do you see any value in Bitcoin?
I don't know the answer to that, Tim. I'll be honest with you. I mean, I think as time has gone on, when we were having this conversation 10 years ago, there were a lot of hypothetical use cases for Bitcoin. And I think as time has gone by, many of those have eroded. It's not really a medium of exchange. I don't think anyone thinks of it in that way. It's not really a store of value in the sense that, it could be, I guess, long term, but it's very difficult to define something as a store of value when it's so volatile. An alternative to gold, I think that's coming under fire because gold has done so well this year and Bitcoin has not. So I'm just not sure ultimately where this is going to go, except to say that, if you don't like traditional markets or traditional financial instruments, to the extent that you're not buying Bitcoin through, regular channels like Strategy or like ETFs or whatever, there is still an argument for playing in effectively an asset that can live outside of the traditional financial system to some extent, a lesser extent all the time, but to some extent. That's about the last use case that I can think of. And I just ultimately don't know how sustainable that is. So I don't have a lot of confidence in the long-term viability, Tim, I'll be honest.
Sometimes I think about crypto and it's like, you know, that person you date and they're like, they're nice, their family's nice, you know, we go to a movie, we have fun. When you have to make the case so hard for something, it makes me wonder, okay, maybe it ain't happening.
Yeah, I mean, I think there's some of that, but you know, there's also, I think it's useful to separate the Bitcoin specifically from the technology underneath it, from blockchain. Let's just say we stopped talking about that. I feel like 5 years ago we talked about blockchain as a technology or whatever. I mean, I think ultimately there is a technology story still here.
Yeah.
And I could imagine a world. You know, I always think back to the internet and say 1995. I hate to age myself. You know, but in those days, everyone talked about Netscape, and no one knows what Netscape is. You know, the survivors of that era were not even born in 1995, you know? And so I can imagine a world, I think it's still early in the crypto world, and I can imagine a world where ultimately what survives 10 or 20 years from now, or not even survives, what is the main story is something we're not even, is a new entrance that we're not even aware of at the moment.
Yeah, I feel like I get blockchain more for like some use cases, if you will. Hey, just quickly, 30, 40 seconds, Nir, before we go. Catalysts for good or bad, if you will, when it comes to equities going forward or financial markets overall. What do you see?
I'm going half full on the glass on this one. I mean, as I look around at the macro environment, I just don't see anything to dislike. I mean, I look at, you know, the 2-year is very near to the Fed funds rate. The inflation expectations are well anchored. If you look at break-evens, no bond vigilantes in sight. Credit spreads are normal. I mean, on the low side, but no sign of distress. Financial conditions are good. GDP is growing pretty well. According to the Atlanta Fed, unemployment continues to be relatively low, even though it's ticked up. And perhaps most importantly, when you look at the profitability of the S&P 500, I'm looking at free cash flow because I want to take into account spend on AI and other spend. When you look at free cash flow margins, the median for S&P 500 companies is 15%. That is very strong. Yes, bricks can fall out of blue skies. But when I look around, I just don't see anything to be happy about. So I say, Happy New Year.
It's a little early, but we'll take it, Nir. Happy New Year. Happy New Year to you too, good sir.
I like optimism. I'm an optimistic kind of girl. All right, Nir, thank you so much. Nir Kaissar, he is Bloomberg Opinion columnist. All right, that's your market view. Let's get now to developments in AI and big tech. As the king of AI bellwethers, we're talking about Nvidia, invested $2 billion in chip design software maker Synopsys as part of a broader engineering and design tie-up aiming, Tim, to infuse its AI computing technology into more industries.
With the tech roundup, we head to the Bloomberg News studio and bureau in San Francisco, where we find the co-host of Bloomberg Tech, Ed Ludlow. Ed, why is Nvidia doing this? Why now?
Yeah, I guess there's a question of why is Nvidia doing this, and then what does Synopsys get out of it? You know, so like Synopsys makes the software by which chips are designed but also validated. So before you send a chip through the fab to be manufactured, you want to know that that design works, and that's a big part of what Synopsys does with all kinds of tech companies. And so part of the interpretation of why is Nvidia doing this is it's a sales channel, because Synopsys is basically saying, imagine how good our software would be if it was underpinned by NVIDIA's GPUs and NVIDIA's catalog of software, which largely it's called CUDA-X. It's basically a library of building blocks for AI that just make existing software platforms better. And so the next thing you're going to ask me about is probably circular financing. But from NVIDIA's perspective, you know, it gives them entry to a tool or a platform that lots of people are using.
So, circular financing? I mean, come on. Like,
Carol did it.
Is it just getting crazy? Or is it real? I don't know.
The parties on this specific deal, NVIDIA and Synopsys, would say this is not circular financing in the same way that the graphic you're showing to our video audience illustrates. There is no requirement that Synopsys purchases from NVIDIA's GPUs. Additionally, and this is all according to NVIDIA's CEO Jensen Huang, who was speaking this morning. Additionally, as I said, Synopsys does business with all kinds of chip makers. And NVIDIA also does business with other makers of chip design software. Siemens is one, for example. And none of that's going to change. Everyone is free to carry on as they want. And it goes back to the why is NVIDIA doing this? You know, this is an area of the technology world we call electronic design automation, EDA software. And a lot of people feel that those systems, which have historically been run on CPUs, old engineering platforms, could be a lot better if they were run on GPUs or AI accelerators. They're just better pieces of software as a result. But there are loads of players. Now everyone's free to have better software, is how NVIDIA would put it.
But why? I mean, Synopsys wants to have NVIDIA as a customer, right? Like,
yeah.
So why did they need
Correct.
to, like, what does that $2 billion investment do? Right? Like,
so this is like highly analogous with the Intel situation, and it's highly analogous with the Nokia situation. And so this year, I've had two specific opportunities to ask Jensen Huang, what's the rationale behind taking a stake? Like, why do you need to own between 2 and 3% of these companies? And his answer is always, I thought it would be a great investment and that in the future that investment will pay off. So NVIDIA got these Synopsys shares at $414.79 a piece. The stock's now higher than that. I can't see it on the screen. $440 a piece. But I remember back in October when we were in DC, I asked the same question of Jensen, why did you have to take almost 3% of Nokia? And he was like, well, it looks like a pretty genius move now, doesn't it? Because Nokia shares are up 20%. And I just, like, in the moment, I couldn't believe that was his answer. But he genuinely believes that it's going to be a great investment because he sees those engineering partnerships changing the respective fields that they're going into.
Okay, Ed, we only have 3 minutes left, but there's two more stories we want to hit with you. One is DeepSeek, because China's DeepSeek unveiled 2 new versions of an experimental AI model that it released weeks ago. It adds fresh capabilities the startup said would help with combining reasoning and executing certain actions autonomously. I'm old enough to remember earlier this year when a DeepSeek update comes out and tanks shares of Nvidia. We don't see that, and we haven't seen that. Where is DeepSeek when it comes to competition?
Okay, so DeepSeek v3.2 has been out for a number of weeks now in the form of DeepSeek v3.2 EXP, experimental. They just dropped the EXP bit. And it's an open source model that, against benchmarking, performs very well against GPT-5, OpenAI's latest model. Where they've made a difference in this open source world is that, like OpenAI, DeepSeek wants to make the tool more useful. So they have the human reasoning element. It parrots the behavior of a human, but it applies the tool in a more useful way. Markets reacted in January through April the way they did because they didn't understand how DeepSeek had achieved that performance for a model at the low cost point that it did.
Does the world need to be worried? Or I guess, like, how does this fit in? How competitive is it, real quickly?
It's competitive.
Okay.
Models at this scale have tens of billions of parameters or more. And what DeepSeek did is called mixture of experts, or MOD designs, where if you have a 100 billion parameter model, when you run the inference, you actually run it. You don't need to access all 100 billion parameters. They found a way of just accessing, say, 10 billion parameters or 60 billion parameters, which makes the cost of running it and the compute much more efficient.
Yeah.
So the model is as performant, it's just easier to run.
I do feel like everything's now about efficiency in terms of power use and just getting things done. Hey, what do we need to know about Masayoshi Son, the SoftBank founder, who said he wouldn't have sold off Nvidia shares of his company, had unlimited money to bankroll its next investments in artificial intelligence? Is there something important here that we should acknowledge?
All you need to know is that he wishes he hadn't sold it, but he didn't have enough money. He needed more money. So he sold the thing that could get him money, Nvidia shares, and then he used it to invest in the thing he thinks will make him more money in the future, OpenAI. And it's as simple as that.
All right. I love when
Even
things
he
are
needs more money.
What does that say? How about buy now, pay later?
That's just society. It's just the world we live in, Carol.
Everybody needs more money. All right. Going to leave it there. Ed, always glad we can go around the world of technology with you. Ed Ludlow, of course, he is co-host of Bloomberg Tech at Bloomberg Television. Catch Ed and Caroline Hyde, 11 a.m. Wall Street time every Monday through Friday on Bloomberg TV.
Rich Go on the Bloomberg terminal shows that Masayoshi Son is the 68th wealthiest person in the world with a net worth of $32.1 billion.
But even he needs more money. Hey, coming up, we're going to get into what's going on with Zscaler. The stock has been outperforming. We talk earnings and more with the company's CEO. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. First trading day of the week, first trading day of the new month, a historically strong month for U.S. equities. But today we got stocks wavering, in fact, lower across the board right now with the Dow, the S&P, NASDAQ all declining. Also looking at a rout in Bitcoin. S&P right now down 22, drop there of 0.3%. The Dow is down 291 points, a decline of 0.6%. The NASDAQ Composite Index right now lower by 0.3%. 10-year at 4.09% with a 2-year currently yielding 3.53%. Spot gold is little changed on the day, down $1 the ounce, 42.38. West Texas Intermediate crude up 1.2%, 59.28 a barrel. Bitcoin, though, the major story, selling off right now by 7%. Bitcoin at 84,833. Japan's largest steel producer, Nippon Steel, will shortlist 2 or 3 states for construction of a major new plant in the U.S. and make a final decision on its location in early 2027. Nippon Steel says its U.S. Steel subsidiary is seeking a site capable of supporting a steel plant with 3 million tons of annual capacity. Today, we're looking at ADRs of Nippon Steel up by 0.2%. Again, recapping, stocks lower. S&P down 0.3%. Bitcoin right now down by 7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, shares of the more than $39 billion cloud security and software company Zscaler are easily outperforming both the S&P 500 and NASDAQ 100 today. The stock is up nearly 40% year to date, and yet we did see shares under pressure today, dropping nearly 4% after Bernstein downgraded the software company to market perform from outperform on growth concerns. Bernstein, by the way, setting its price target on the stock to $264 a share. That's a 5% increase from the Friday close. I should point out that initially Bernstein, when the company reported earnings last week, they initially maintained their outperform rating. So there's been a lot of movement. Analysts in general, Tim, a flurry of them weighing in, some raising their price targets on the stock, others lowering them. And we should point out the stock did drop about 13% last week. That was on Wednesday following their earnings.
Yeah, the forecast was annual revenue that was only slightly above estimates. For more on the company, we're joined by Jay Chaudhry, founder, chairman, and CEO of Zscaler. He joins us from San Jose, excuse me. Also with us is somebody who knows this company very well, Bloomberg Intelligence's global head of tech research, Mandeep Singh. He joins us here in the studio. Jay, I just want to start with you. The growth concerns, the disappointment over the annual revenue forecasts that was only slightly above estimates. Is growth slowing?
Not at all. We had an outstanding quarter. Our ARR growth, 26%, revenue growth, 26%, free cash flow margin, 52%, operating margin, 22%. We beat all the metrics that Wall Street was looking for. In fact, if you take our free cash flow margin and add it to our revenue growth, that's 78%. That beats the rule of 40 that many investors look for very, very well. And this is at scale of $3 billion or higher. There are only about 5 pure play enterprise SaaS companies that are in that unique class. So we've done extremely well. We are very proud of what we delivered, and we passed a meaningful beat we did and raised our annual target. So I think we're very pleased with it. I think investors get it wrong from time to time. This is one of those times.
That's what I was going to ask. You know, what you think investors just got it wrong? Because, I mean, 13% is a pretty big hit. So you think, I mean, that's not like them wavering at all. They really wanted more from you guys. I mean, the expectations were certainly high.
Look, markets do what they do. I have one focus: keep on innovating and serving our customers. And those innovations started with Zero Trust architecture, which has changed the world of old school firewalls and VPNs. And now as AI security is coming, AI security is becoming a big concern. And Zero Trust that we pioneered is the foundation of it. So we have amazing interest from our customers. That's why we're able to deliver these strong numbers. Over 45% of Fortune 500 companies trust us, depend upon us. So I'm very bullish about our future.
So, Jay, talking about AI security, I mean, you have a business model that's reliant on companies hiring more people, and you have a seat-based model. How does that change with AI security? Because AI, what we are seeing out there is more consumption-based. So how does that impact you and your business?
It's a good question. So we started out with bringing zero trust for users, so users can access applications without being on the company network. And natural pricing for that is user-based. Then we moved the model to the architecture, the next thing. How about zero trust communication for workloads, cloud workloads? That's actually based on number of workloads and actually amount of traffic. So it's not just user-based. If you think about AI security, there are many facets of AI security. What one of the biggest things our customers look for is, as every company starts using a lot of agents, these agents are somewhat like people. They need to access certain applications. They need to talk to other agents. So we are extending our zero trust exchange that are designed for users and workloads and branches now to agentic exchange, so that right agent can talk to right agent and right application. So obviously there's an opportunity for us to secure that communication. Yes, the number of users may not grow significantly, but I believe every company will have scores of agents for every single employee, and they need to be secured, and we are extremely well positioned to handle that.
And talking about agents, it sounds like one of your biggest competitors is doubling down on observability and identity, especially on the browser side, as an area of focus for agentic AI. Is that something you feel is very important to roll out the agents?
So some companies try to go and buy many companies to create a collection of things. We are very focused on what we want. We were focused on zero trust, and then we focused on AI. Regarding observability, we actually do observability for the areas that matter to our customers. We sit between the user and the application. So today we have a sizable business, hundreds of millions of dollars business, with a product we call Zscaler Digital Experience, where we can tell our customers if any user is having any performance issues as they try to access those applications. It's integrated with the platform. While many companies have many point products and they're separate, we like to have integrated platform that serves our customers, so we not only provide secure and reliable experience, we make sure that it is fast and you can troubleshoot those things. But I'm not going into broad observability, which has become a broad area. We are focused on the areas that are relevant to our customers.
And identity, is that something you care about, the identity on the browser?
Identity is important. Think about identity for users. We have been working from day one with all leading ID providers for users, whether it's Microsoft and Okta and others. Now, when it comes to identity of agents, I believe there'll be many contenders. Microsoft, Google, AWS, Oktas of the world. Our philosophy is to federate those identity providers, use that identity, and we are the zero trust exchange, the switchboard, to make sure the right AI agent talks to right agent. In this world, I do not need to own everything. I need to do some of the things I do the best and integrate with partners with proper API integration so our customers get the biggest benefit. We believe in doing a few things, but do them extremely well and partner with others.
So I do feel like we're all learning as we go. And of course, Mandeep and Jay, you guys are ahead of us in a big way. But when they talk, Mandeep, about zero trust, this never trust, always verify, I think about digital touch points, thinking that there are threats within an organization and outside, and you've got to make sure there's security everywhere.
Yeah, no matter where you are, and that's where, SASE is a term that gets thrown a lot, and Zscaler is in the leading position in that Magic Quadrant. So I have one other question, Jay, for you. So given the amount of data in the world of security, and you guys generate trillions of data points, Will the security world have its own LLM?
Yes, the answer is yes. We are actually working on building our security-focused LLM. And I do not need to have the large language model. Security is very focused set of high-quality data. With over 8,000 customers and 45% of Fortune 500 companies, we generate over 500 billion transaction logs a day. Those logs are anonymized, but they can give us an idea of where the threats are coming from. We can find a needle in a haystack and help all of our customers. So AI is only as good as the data that powers it, and we have the best data, and we believe we can help identify some of these threats in almost near real time and provide a closed loop system so that the threats can't really exploit our customers and provide them benefit at a much faster pace. That's why we are focused on AI-powered security operations. And our acquisition of Red Canary is part of that strategy because they built some very, very good agentic AI technology that we're integrating with our platform.
The use of AI to make the system more robust certainly makes sense, but I got to tell you, Mandeep and I are actually moderating some panels next week at a Bloomberg Live event that's focused on cybersecurity. And in the prep that we're doing for that, what I keep hearing from these chief security officers, from these chief information security officers, is the concern about how AI has made the attackers just more robust and the attacks more robust. Can you point to specific instances where hackers have actually used AI to enhance their attacks, and did it work?
Yes, there are many, many examples. Let me give you a few simple ones. Every attack starts by finding your attack surface, where you are. And public IP address is the starting point. Every firewall, every VPN, every application portal is an attack surface. In the past, a hacker may have taken weeks to identify it. Now you can go to ChatGPT and say, tell me all the firewalls and VPNs that have vulnerabilities, and give it to me in a nice tabular format. Under 60 seconds, you can get that. Now, the second part hackers would do is these phishing emails. Now they can ask AI to say, write an email that looks like a CFO's writing style. No typos, make it very targeted. That's number two. Third, hackers are using automation that AI provides. Once they are on the network, automation can find the key applications and try to encrypt that data. A lot of that is happening. What does Zscaler do in this case? Number one, we hide your attack surface. Your applications are hidden behind our cloud. Bad guys can't even find you. They can't find you, they can attack you. And the second is own the network. The biggest problem with firewalls and VPNs is they're trying to protect the castle, and we actually make it zero trust.
Jay, we've got to run. This was so informative and so enlightening in terms of AI security. We so appreciate it. Jay Chaudhry, he's founder, chairman, CEO of Zscaler, and of course our own Mandeep Singh of BI.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P, and NASDAQ. First trading day of the new week, first trading day of the new month, a historically strong month, but stocks are lower across the board. Traders are shunning riskier corners of the market amid a sell-off in cryptocurrencies. The S&P right now at 6822, lower by 0.4%. S&P down 26. The Dow now lower by 320 points, down 0.7. The NASDAQ Composite Index down 76, drop there of 0.3%. Your 10-year, 4.09%, with a 2-year, 3.53%. Gold flat on the day, 42.41 the ounce. West Texas Intermediate crude up 1.5%, 59.45 a barrel. The big story, though, the sell-off in Bitcoin. Right now, we have got Bitcoin plunging by 6.9%. As crypto continues its slide, there are concerns that strategy may soon be forced to sell some of its roughly 56 billion cryptocurrency haul if token prices continue to fall. Strategy, formerly known as MicroStrategy, still uses the MSTR ticker. Strategy down now by 6.8%. Again, Bitcoin is also down 6.8%. S&P down 27, a decline of 0.4%. Coming up after the close of trading, we'll be hearing from MongoDB and Credo Technology. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So our Bloomberg Intelligence team writing earlier today that holiday retail sales appear to be off to a good start despite mixed store traffic. There's a bunch of metrics coming at us. You have Retail Next coming out saying visits to malls were soft, down 3.6%. MasterCard saying Black Friday's online and in-store sales rose 4.1%. Salesforce says global online spending will increase 8% to reach $53.7 billion, while U.S. spending will rise by 4% to $13.4 billion. And then there's Adobe Analytics, Tim.
They noted a sharp 9.1% acceleration in digital sales as consumers leaned into the ease and convenience of buying online. Well, someone who knows how to read through all of these numbers, she does her own in-depth research too. She understands the retail industry. Dana Telsey is back with us, founder, CEO, and chief research officer of Telsey Advisory Group. She's been joining us here at Bloomberg quite a bit, Carol, going back to Black Friday.
She was here Wednesday,
She was
Friday,
here Wednesday.
today.
She's here on Cyber Monday.
Thank you.
She joins us here in the studio today.
Thank you for having me. There's a
We
lot
love
to
having
talk
you.
about.
I think you have a desk with your name on it somewhere here.
It's easy. Thank you. And convenient to my office.
We love. There are so many different metrics that come at us. Is there a metric that catches your attention more than most, or is it that you rely just on kind of the work you guys do?
I rely on what we do, but I also look at all the metrics to tell a story. And frankly, what you're seeing the metrics tell the story of, essentially it was solidly optimistic for this upcoming holiday season. They're good metrics. A lot of the metrics surpassed their expectations. The other thing, when you look at online versus in-store is always going to be lower than online because online is a smaller part of the business. But one of the differences this year is online sales, the rate of growth slowed. It's going off a bigger base. While you're looking at in-store, the rate of in-store sales increased for some. Traffic is holding steady with what it's been year to date. And I think, for whatever you want to say, the Gen Zers, the teens, they like that experience of being in stores. That's what I saw on Friday when I traveled all the stores.
What do you mean by that? Like, this is like the same people who watch Friends, ironically, because they, didn't watch it the first time around, are now going to the mall? Like,
the teens are going to the mall
that's
also.
what I mean.
Everyone wants the experience. I think what everyone missed from COVID, talking to each other, saying this looks nice on you, or look at this deal, that communication matters.
So what's old is new again, Carol. They're going back to the mall just like we did when we were kids.
Well, I know. Who doesn't love a mall? I don't love a mall anymore. Having said that, though, Dana, like my daughter, 22, there was something she was going to buy online, but we went to Bloomingdale's to try it on, and she ended up like, okay, this doesn't work, and not buying it. So it's like interesting, kind of this mix of how we're figuring it out of how to shop.
And it's always the surprise, because when you buy something you've had before, maybe you do get the same size or you know what it is. When you're buying something new, and one of the things this year is there's newness to wardrobing. You're looking at shoes where people are going back to whether it's brown suede boots like Steve Madden is selling, whether it's wide leg denim jeans. It's not just the same old, and partially because events are taking place.
So we look at retail sales as this monolith, but we know that's not the way that they're actually sliced. What would you say characterizes the companies that are doing a good job at actually bringing consumers through the door versus the ones that are not?
Newness. I think the newness and product innovation really matter, something that they don't have in their closets. You think about the newness even in consumer electronics, whether it's Nintendo, whether it's Oura rings, there's new things out there. Same old, you're going to watch for the deals and what the value you're getting. But today, when you have, whether it's Coach adding new items to their Tabby collection, whether it's Macy's, who now has 40% newness, 20 new cosmetics brands in their stores, whether it happens to be Steve Madden, which I mentioned with the brown suede boots, the closed-toed shoes at Birkenstock, or you look at Levi's, which frankly has new collaborations that's driving demand. So what are you showing me this year that you didn't show me last year?
What about promotions? Because I have to say, leading up to it, I saw some big promotions, 50, 60, and they built through kind of the weekend.
So we do a tracker, 85 retailers that we track every holiday. We've been doing it for over 10 years. we did see promotions build, particularly in some of the specialty apparel retailers, but not everyone.
Yeah.
I mean, we saw some promotional increases, whether it's the Bath and Body Works we saw it in, and you've seen a wider range of promotions instead of maybe last year 40 to 50, maybe it's 40 to 60%. You're going to watch that. At the same time, you know who had fewer promotions or less promotion? Ralph Lauren, 30% off instead of 40% off last year.
So what's the picture that all of this paints of the consumer?
I think it paints a consumer who's a bifurcated consumer, higher income continuing to spend, lower income basically being very discerning in what they're spending on their, particularly on essentials. But it's also showing consumers want to celebrate the holiday season, and they'll think about January and they'll spend for holiday.
How much, though? I think about this a lot. I mean, how are they buying? We saw some information about the buy now, pay later, continuing to be an important payment option for consumers. Adobe forecasting $20.2 billion will be spent through the payment method this holiday, 11% growth over 2024.
I think on the buy now, pay later, look who it's going after. It's going after those consumers who have more limited spending power, and it's picking up interest. You are seeing companies who've had buy now, pay later for a long time. It's still important.
It's everywhere now.
It is everywhere. So it's not as differentiated as it had been in the past.
It's not a sign of anything in your view?
No, I'm watching credit card delinquencies a lot. We're looking to see what that looks like. We're watching certainly what consumer spending looks like. And if anything, you're still seeing some pretty solid results. Take a look at the retailers' earnings the past few weeks. While they've been mixed, some of the outliers, I mean, who would have thought Kohl's basically showed some improvement. And we've seen some good results. More to come this week, because this week everyone from Macy's, Victoria's Secret, Ulta, Signet are all reporting, and we'll get some more color on discretionary.
So it feels pretty good.
It feels okay.
Or
Tariff-driven price increases. I mean, the demand elasticity is something to be watching carefully.
So that's definitely there. Like, does it feel like a season where folks were like, holidays are important, and so I'm budgeting so that I can spend here, and maybe I won't do something else?
I think there's some of that, but I think they're also spending, saying, I'll pay it back later. I think they want to celebrate, given it's been a tough year with a lot going at consumers all at the same time.
So you said that Nintendo has done a good job this year of bringing consumers through the door.
Yep.
Companies including Steve Madden,
Yep.
Levi's,
Ralph Lauren.
Ralph Lauren. What are the hot products as we look to
You
December?
have to say Labubu.
Oh, Labubu is the hot
Still?
product.
Labubu
Oh, yes.
still? Okay.
It is. I don't even know what a Labubu. It's like a little.
It's a
It's a little troll
collectible.
thing on a
Yep,
backpack.
collectible. Yep. It could be on handbags, backpacks. Guys and girls wear Labubu or have Labubus, and it is the hot
Do you
thing
have
now.
a Labubu?
No, I don't.
Okay,
Do you?
just checking. No, I don't. No, but it's just kind of.
Well, now I know what I'm getting each of you for the holidays.
Thank you.
Is there like an it thing? Is that
Is the it thing. The
Yeah.
Labubu is the it thing. I mean, there's other things out there that are certainly trending. Legos are always trending and are very popular, so who can't take that away?
Yeah.
When it's gotten colder out, so you're definitely seeing sweaters and outerwear take center stage.
Love it. You're not going to go anywhere because we're going to dig a little bit deeper into some of the stocks that you've mentioned a few, but we'll dig a little bit deeper. Dana's going to stay with us. Dana Telsey, founder, CEO, and Chief Research Officer of Telsey Advisory Group. We will have a check on trading and get a special edition of Stocks on the Move.
Hey, well, speaking of stocks on the move, off our best levels of the day, and in fact, off our worst levels of the day, we're seeing the S&P 500 down about 0.5 percentage point right now. The NASDAQ Composite down just about 0.5 percentage point as well. The Dow down 0.8%. Coming up next on Bloomberg Businessweek Daily, Dana Telsey staying with us for Stocks on the Move, a special retail edition. That's next.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are coming up on the last hour of trading on this Monday, December 1st. December off and running, the last month of 2025 in terms of trading. Quick check on the markets for you. And the S&P 500, we're down across the board, but we're off our worst levels of the session. The S&P 500 down about 0.5 percentage point. You've got the NASDAQ 100, a decline of about 105 points, down 0.4%. If I look at the major industry groups in the S&P 500, only energy is outperforming. It's up about 1%. Everything else is lower. We're talking a lot about retail, consumer discretionary, Tim. Little changed for the day, but at the bottom of the pack, those 11 major industry groups in the S&P 500. Utilities are down about 2%.
Yeah, healthcare down about 1.3%. Industrials down 1%. Real estate down 1%. Communication services down 0.9%. And financials down 0.6%.
All right, I'm Carol Massar along with Tim Stenovec. With us is Dana Telsey, founder, CEO, and Chief Research Officer of Telsey Advisory Group. We are talking about retail since it is Cyber Monday, and we want to get into some specific names that you seem to be kind of on your radar, and Ralph Lauren is one of them, Dana. It's up 60% year to date, and I think it might even be trading at an all-time high today. What is it about Ralph Lauren that you find so interesting?
You know what's interesting? Their AUR is going up. Their average unit retail selling price. They're capturing new and younger customers. They have opportunity to expand globally, and they're on everyone's watch list. They have stores and they have online, and they've also enhanced their wholesale channel. So the strength of how that brand is able to appeal to multi-generations is compelling.
That blows me away because it has been around for a long time, so iconic, so identified with its founder, but here it is, like still going.
And still relevant to younger and their core customers.
The branding's certainly an important side of that, but also figuring out the supply chain and figuring out tariffs. They've done a good job.
They've done it. And take a look at the new things they're doing. If you look at some of their stores lately where they have restaurants, there's lines out there for the Ralph Lauren coffee.
Is that profitable for them? Like, what does that do for
huge
them?
Traffic driver, brand awareness, brings a younger consumer, and makes their brand top of mind. And you're seeing more companies begin to do things like that. Coach is going to do the Coach Coffee Shop. Aritzia has the AOK Cafe with some of the Balthazar pastries there.
Yeah.
So the experience, and experiences create memories, the experience of shopping, eating, being able to meet friends and socializing keeps the brand top of mind.
Okay, that's Ralph Lauren. RL is the ticker. What about the ticker SHOO, shoe? Steve Madden. Little change so far this year. About 10% or more of the float is shorted right now.
What's interesting about that is what's interesting for next year, they acquired a company called Kurt Geiger, which basically has higher prices than they have, more of a handbag business. They're beginning to open stores in the US, benefiting from Steve Madden's supply chain. At the same time, don't forget the core Steve Madden business, where they've had a real uptick because now consumers are wearing more than just sneakers. They're wearing the brown suede tall shaft boots. They're wearing shoes to go out with dresses and for casual wear, given the change in wardrobing. And their ability to basically being able to have the test and react model. They're fast at capturing trends. And Steve Madden, given some of the interviews he's done lately, has made him relevant to all different generations.
Yeah, that's another one he's now been around for a while, but still relevant.
Very much so.
All right, let's talk Macy's. They actually report their earnings on Wednesday. The stock is up about 34% year to date. Tell us about Macy's, which has gone through over the last few years some really rough times.
But also they have the bold new chapter strategy with the CEO, Tony Spring, who's been at the company forever, but CEO of Macy's for a short period of time. And he's putting initiatives in place that are basically bringing newness. When you think about Macy's for holiday 2025, around 40% newness to the assortment. And let's watch for 2026 for some expansion of Bloomingdale's. New brands, capturing more of their customers' dollars. And you know what? It's the newness of what the concept is. It's not the oldness of department stores that Tony is attracting existing customers and new customers.
And what's the way they're getting customers to the door?
Couple different ways. I think they're doing it through some of their loyalty programs. I think they're doing it both online and in store. And I think they're investing in the stores. They've shrunk the store base to focus on what matters and putting more service in some of their stores that are some of their best at stores.
All right, got to say, one of the things that always kind of blows us away is just cosmetics and just the explosion we've seen. We've seen it with Sephora, but Ulta reports this week. This stock up almost 30% year to date. I think they report on Thursday. It is the cover story of Bloomberg Businessweek, just talking about, you don't maybe think it's the largest, I think, beauty retailer in the country because it's kind of in malls and it's in hidden places, but it's just been a standout.
It's been on a tear lately, and with Keisha Steelman, who's been at the company, I believe, for 14 years, took over as CEO last year. Her Beauty Unleashed plan is doing a couple different things. They brought in more new brands this year so far, about 49 new brands in the first half of the year compared to under 25 last year. She has stepped up international expansion with the acquisition of Space NK and now opening stores in Mexico and the Middle East through partners. she has also uptick, frankly, some of the initiatives that they have, whether it's the service initiatives in store, whether it's bringing new products. And I think that service, whether it's the hair salons or others, it drives traffic there.
Yeah.
And so with their loyalty program, they're a must-go-to because the blend of mass and prestige. And she gets out of what she feels isn't as impactful. So the Target Ulta partnership won't be going forward after it ends later this year.
This was so incredible. Dana, thank you as always. Dana Telsey, of course, of Telsey Advisory Group. All right, that's going to do it for Tim and me. Check out Stock Movers Podcast, our 5-minute episodes. Find it on Apple, Spotify, wherever you get your podcasts. The close coming your way on TV. This is Bloomberg.